Now, it seems that tech stocks are really taking a beating, Brendan. There was a large Wall Street sell-off yesterday. We mentioned there was another decline on Wall Street today. Why is all of this happening?
Well, there's a combination of factors, very least, not the least of which is it's January. And the market in general and tech stocks in specific have been on a real run since the depth of the fear-based correction of the pandemic in the spring of 2020. They've been going straight up for the last year and a half. So if we're going to take gains in your tech stocks, you're probably going to take them in January. There are other factors as well. The future of the market and valuations and interest rates. But I think that's probably the single biggest reason is that it's January, which doesn't sound terribly scientific, but that's a big part of it.
So considering that a lot of investors have some sort of tech stocks in their portfolios, should they consider maybe selling their technology positions at this time?
I think it depends why they own them. If they were owning them for the big short-term run-up and thought they could get everything out of them, then maybe. But if they don't have a compelling investment reason, and selling them just for, say, tax reasons might not be the best move. What they could do with them, if they are so charitably inclined, is actually take them and you can make a donation of a technology stock to a charity in Canada and get a tax deduction and not have to pay any capital gains tax. So there are lots of things one can do with them. But if you're buying a tech stock, a particular company, whether it's Microsoft or Roblox, because you believe in what that company's doing and are really interested in it and think about there's a future for it, if it's a long-term hold, I wouldn't sell just because it's a short-term correction.
And there's also been a rise in interest rates recently. So do you see if there is any correlation with the sell-off and this increase in interest rates, Brendan?
Okay, well, that's an interesting question, Nima, because a lot of these tech stocks are trading at very high valuations relative to the amount of money they actually make. And the idea is that if interest rates are very low, the fact that they're not going to be making money for several years, those future earnings are not discounted by very much because interest rates are so low, the rate at which you discount future earnings is very low. But as interest rates rise, the more one discounts future earnings when one's figuring out a valuation. So higher interest rates should mean that stocks will not trade at as big a multiple to the future earnings that investors are hoping for. So long-winded way of saying, yes, higher rates, probably not good for tech stocks or other stocks that are at great big valuations relative to the money they might make in the future.
And do you think that this can be compared to the tech bubble in 1999, Brendan? Would you be able to remind our viewers how that played out?
Well, that was an interesting one because that was so what happened was the late 90s, because of a relatively small, infinitesimal financial crisis compared to what we've been through since, the U.S. Federal Reserve flooded the market with money. And what happened was that money went to buy stocks, particularly tech stocks, and the NASDAQ went all the way up to 5,000 or 5,400. Now, what you mentioned Microsoft earlier, what I feel, and I never said this on TV before, but what I feel was the trigger for the tech bubble bursting in the early 2000s was Steve Ballmer, the then CEO of Microsoft, saying that he thought Microsoft was overvalued. Almost never happens that a CEO says his own company's overvalued. And people thought, well, if Microsoft, with all that cash and all that earnings, is overvalued, what about all these, at the time, .com stocks? Flash forward 20 odd years, you've now got a lot of stocks that are trading at very high multiples, as we said earlier, based on future earnings. So I think there is an analogy, but I think the analogy might also be, look what the internet has done since the .com bubble. Look how important it's become to the economy. So too, whether it's blockchain or cryptocurrencies or the metaverse, I think the current, if it is a bubble, the current bubble stocks will have a future in whatever the next virtual or real economy comes next.
Very insightful conversation as always, Brendan. Thank you again.